Not all numbers are born for the balance sheet. Some are born to bring a smile. Some usher the future. Some make you stand tall. Some numbers light a fire and fulfill wishes. Some spoil you silly. Some echo joyful shrieks. Some numbers have smiles written all over them. Some make the planet happy. Some make the planet healthy. Some numbers rise against all odds. Some are made for dreams. Not all numbers are born for the balance sheet. As we spread our wings globally, we at Mahindra believe that the numbers we are most proud of are the number of lives we have touched. Mahindra, together we rise.
Good morning, ladies and gentlemen. A very warm welcome to you on this Thursday's edition of Markets, which is laced with geopolitical events which have a great impact on both the economic template of India and, of course, the stock markets too. US President Trump late evening yesterday doubled tariffs on Indian merchandise exports to 50% in retaliation to India buying Russian crude oil. Now, India has termed this move as unfair, unjustified and unreasonable. President Trump has imposed these additional tariffs to ensure that India weans away from Russian oil imports, and in turn a lot of geopolitical events have been lined up. Let's understand the significance of each. Indian Prime Minister Mr. Narendra Modi will be headed to China. National Security Advisor Mr. Doval is already in Russia, and of course you have Minister of External Affairs Mr. Jaishankar also headed to Moscow. About 35% of total oil imports of India are of Russian oil. Russia exports roughly about 3.5 million barrels per day, in which India buys 1.7 million barrels and China buys 1.1 million barrels per day. So this is the broad structure of what we know so far. Now, what is really interesting is that you have the gift Nifty, which is Nifty futures trading in non-market hours, giving you a signal that all is particularly well in the market. Remember, we've had a sideways trend as far as Indian stocks are concerned. The Nifty is at a 2-month low, and these are prices that we've seen in mid part of June. Now, what will happen from now on, only time will tell, but the broader structure of the market is weak. It looks structurally going to take a further down dip. Look at how the Indian rupee has worked. It is now headed for a fresh record high as Indian mercantile exports to the US take a hit because of higher tariffs. This is the broad structure. Now we'll be discussing all this and a lot more with our guest list. We are now going to be joined by Mr. Subhash Garg. He's the former finance secretary. From New York, we'll be joined by Mr. Anurag Singh, managing partner at NSID Capital. And of course, during the day, we'll be discussing this and a lot more. We'll get Mr. Garg shortly with us, but for the moment, understand that the markets are going to be in pain. Mr. Garg has joined us. Good morning to you, sir, and a very warm welcome. You are just the right person to understand the dynamics of Indo-US trade. These are something that were always on your desk when you were the man in charge of North Block. A very good morning to you, sir. How do you see this imposition of additional 25% tariffs? Is this a negotiating tactic that Mr. Trump has employed?
It's not a negotiating tactics. I don't think Trump believes in bargaining or collecting the negotiating chips. He has done what he felt is in US interest or in his own political interest. So I don't think anyone should be thinking that this is another negotiating chip, that if he has raised it higher and now if we try to negotiate, he will come back to where we don't know. So I think we should disabuse ourselves with the notion that this is a negotiating chip. He is a very hard bargainer. He has been able to successfully get the deals from the many other powerful countries in the world on the terms which he wanted, right? Our problem was that right from the beginning, we were not in a position, or we had boxed ourselves into a position that we were not in a position to give what he wanted. And therefore, a deal which has been impossible right from the beginning has turned out to be impossible now. So at this moment, you have only two options. Number one, you ignore this, whatever he is doing, and keep on doing your business the way you do it. It might lose to some loss of business in United States. That's all. The second option is to redesign your negotiating package. Can you think of, if you want, of sort of offering a package to him in return for something which we want, and do a deal? And there we'll have to do away with many of our holy cows. Like, I don't know why we can't handle agricultural imports. What is so great about dairy? So if we can think out of the box and in a manner where we give to him what he wants, and we also get what we should be wanting to that. So that is the second option. At this moment, I don't see the way foreign ministry has been issuing statements which are only the official speak. There is nothing really sensible out of that. So at this moment, it looks that the option number one is the only option available to us.
Mr. Garg, thank you so much for taking the time out for this very critical conversation that we are having with you, sir. At this point in time, I also wanted to understand from you, what are the options in front of India? You did mention a few. I want to understand, especially when it comes to the stance that India should be taking as a response to what US has just done. At 25% tariff, we were already very uncompetitive, and at 50%, it virtually seems there could be no trade. So what kind of a stance should India take?
Let me explain to you one thing. So Trump wants access to Indian markets at zero rate of duty, and for all the items which has been sort of no-go so far, dairy, GM oil and things like that. So that is his ask, right? In return, he is prepared to give India something like 15% of tariff for the goods exported to United States. Now, can we make a deal? Can we make an offer saying that we will give you 0% duty access for American goods, and we'll also open up the Indian market for those things which we have not opened earlier? But in return, you give us 0% duty access for all our exports to America. Not 15%, not 25%, 0%. Can you negotiate that? I think we can negotiate that if we play from the position of strength and in a business-like manner.
Right. What we'll do is we'll also introduce Mr. Anurag Singh, Managing Partner at Ansett Capital. A very good morning to you, Anurag, from our side. I know it's late night in New York. Thank you for joining us. How do you see this fresh 25% extra duty on Indian merchandise exports. Is this a negotiating tactic employed by Mr. Trump? We have 21 days to either agree to what he says or agree to swallow a 50% tariff. What's your view?
Completely concur with Mr. Garg here. I think at best we can get away with the 25% surcharge. That seems to be the negotiating ploy, right? With 21 days to go. But the base 25, I think, is going to stay, which, by the way, is not such a bad deal if we don't open anything to the United States, right? Because at best you can get to 15% what European Union or Japan got, but US got the better deal there, right? So I think India should just absorb 25% and move on, right? Because that's the choice it looks like government has really decided to take. I don't know the other 25 what India can give away, because look, we're not privy to the discussions inside. However, I think all I keep hearing is the red lines. Agri is a red line, luxury is a red line, mass market is a red line. I have not heard green lines. So, Shalji, my concern is I never hear that we were open to exclusively opening this sector. That's Tesla gets imported to India with 70% tariffs. So that tells you even the luxury is not open. So when you don't open the mass market, you don't open luxury, you don't open agri or whatever, what else can US sell to India ultimately? So ultimately this 40 billion gap of goods, the trade deficit has to be bridged. And either India buys defense planes or something, which also India is not leaning on. So I find it hard to believe what else can be offered there actually. It's a tough one, Shalji. It's not easy.
Okay. You know, what we also given to understand that Donald Trump has actually said that there could be secondary sanctions as well. And we do have a bite of Donald Trump that we'd like all our viewers to also hear. Let's quickly listen in to what Donald Trump also had to say. Meanwhile, let me also highlight for all our viewers what our India Inc. officials and some of the biggest think tanks have actually responded to what has been announced by US President Donald Trump yesterday. Look at Amitabh Kant. Donald Trump has, he said that Trump has provided us a once-in-a-generation opportunity to take the next big leap on reforms. Crisis must be fully utilized. I want to come into Mr. Garg on this statement that's been made by Mr. Amitabh Kant. In what way can India really turn this crisis into an opportunity for us, sir?
See, I don't think we should be talking in terms of turning crisis into opportunity. Let us first get us out of this crisis. And for that, I think we need to talk to put some sense into our heads. Let us just look at what was also being said. What are red lines? Look at dairy. What is our problem in opening up dairy? Right. It is a 50 years legacy which we are or mental block which we are carrying in our mind. It used to be a time when European Union was flooded with the mountains of milk, and they were flooding the rest of the world with cheaper milk. It's not the case any longer. For America, the only argument which has been put so far into last 20-25 years, including when I was also negotiating, this was the argument which was put in, that the Americans cow feed on non-vegetarian stuff, and the data showed that about 1% of American cows perhaps were eating some food mixed with the bones crushed into that. That's all. Indians in America, there are more than 3 to 4 million people there. They eat the same dairy. They have no problems eating that or using that dairy. What is the problem? Why we can't allow the Americans to export the dairy to us? At the most, when that dairy product comes into India, we can put some mark there saying that this might have come from cows which might have eaten some non-vegetarian stuff, and leave it to the judgment of the consumers, whoever want to buy and consume that consumes it. Whoever doesn't want to consume doesn't consume it. And therefore, the problem is not with what blackmailing Trump is doing. The problem is also that we have boxed ourselves into such nonsensical restrictions on ourselves in the name of protecting our farmers or whatever. Let us take GM soybean oil. What is our problem again in importing soybean oil? We same argument. Our Indian people in America use the same oil. They in fact use other kind of oils which we have not been using so far. So GM oil scientifically has no risk in comparison to any other oil. What is the problem again if India allows the GM oil to come here and again put a mark on or the warning on the box or the bottle on which it is sold that this might have some GM mustard or GM soybean used for making this oil? That's all. So we are our own enemies. We have, in fact, adopted a very clerical kind of approach to these negotiations. Trump is a businessman turned politician. So he is using the politician's tool to do business. And we are using clerical tools to do business with him. And that is the reason why we are not able to progress further. So Amitabh Kant's statement, part one, is you can convert this into an opportunity if you are able to walk out of this kind of cobwebs which we have sort of tied ourselves into.
Yeah, Mr. Garg, the issue here is that both these lobbies are very, very strong voter bases as well. What you say is absolutely right if you see it from the small window from which you are looking at the world. Farmers, if they decide to go against the government, which they in any case are, will protest very heavily if you get cheap milk coming in from the US. I understand the fact that Indians abroad are using the same milk, the same GM crop and the same seeds, but they have no choice. In India you have choice. The point is the overwhelming import of, let me please finish. The overwhelming cost structure that the American dairy enjoys over Indian dairy is going to put your entire cooperative milk unions on the back foot. And that's a very big political vote bank.
No, that is where you are tying yourself into knots. In fact, believe me, not a single farmer is going to protest. It's only the farmers' lobby, the politicians' lobby, the Swadeshi kind of lobbies, which are creating a shindy out of it. We have opened up so many things in the agricultural field, and where is the protest? And even if there is a protest somewhat, we should deal with it. Now, if we use that as an excuse to ask Trump to give you concession on this, which he doesn't understand, which he will not grant you, the deal will not happen. So you decide whether you want to placate a small, ignorant, unjustified domestic constituency, or you use the expressions like that it is unjustified, unfair for what Trump is doing. It's your choice. You may walk out of the deal, no problems, and satisfy a domestic constituency. But you can't serve both of them.
Absolutely, Mr. Garg. It was a pleasure to seek all those insights. This merits a longer conversation, which we will have in the due course of the days to follow as well. But I have to go across to Mr. Ansett once again and ask you, sir. You were talking about the red lines.
Now, right?
Yes. Thank you so much, Mr. Garg, for being with us. Mr. Ansett, tell me, when it comes to the red lines that you were talking about, which are the sectors that can get turned into the pink lines at least?
I really don't know. That's what I'm trying to find out. The honest answer is everybody look, and I think I completely concur with Mr. Garg's view. Everybody comes out and say, this is the red line, we can't cross this. where nobody is talking of the green line. The honest answer is India was not willing to offer anything. I think here Scott Bessent is on record saying that they were frustrated with the pace of negotiation of the Indian. And I completely. Have you tried to negotiate with the government? Look at the look at the way they negotiate. I mean, here they're meeting a bigger bully. They're not going to like it. So the point is, India wanted to defer, delay, and defer everything to like 3, 4 years later. Nobody is that fool. I mean, so honestly, the point is maybe it's a choice India has taken, but it might be a good political choice. It's not a great economic choice. The economy after 75 years, if we are saying our farmers are not ready, our dairy is not ready. I see some industrialists who are hiding behind tariffs, putting tweets of nationalistic fervor. I mean, we can choose to be closed all we want. Let's not at least argue that this is beneficial for the consumers. Nobody is benefiting with 70% tariffs on Tesla. Nobody benefits with expensive dairy products and all that adulteration that goes around in India. And nobody is happy buying expensive foods and fruits and vegetables. So I mean, the point is, all Trump is saying is okay, be happy with that, but at least I will not allow you to access US market for free. And I think that's a US independent call as well, right? We should not at least try and be a victim here. So Sakshi, my limited point is, if the government has taken a decision, please move on. Let's not keep the pot boiling and make it a big issue. If you think you can let go of 30, 40 billion of exports, be that as it may, and just move on. In US, nobody's talking about it. There's just a couple of headlines and then people move on. But we just keep boiling the pot as if something will come out of it.
All right, Mr. Singh, thank you so much for speaking to
Yeah.
us and sharing all your thoughts there, joining in late in the night from the US. I know it's a longer night for you. You have to delve a little more deeper and keep, reading in between the lines. And we'll definitely catch up again with you once more developments come in. 21 days to go, and we are hoping there could be some more outreach. There could be some more negotiations to go. Thank you so much for speaking to us. Ladies and gentlemen, we are now joined by two more experts joining in on the program. Dr. Jayant Dasgupta, former ambassador to the WTO, is joining in. We also have with us Mr. Karan Bhasin, an economist who's with us on the program to discuss what exactly should be made out of what has been announced in the US yesterday. But at the same time, let me play out the Donald Trump bite for all of us to begin this conversation now with Karan as well as with Dr. Dasgupta.
Indian officials have said that there are other countries that are buying Russian oil.
It's okay.
Like China, for instance,
It's
buys
okay.
more.
Yeah.
Why are you singling India out for these additional
It's
sanctions?
only been 8 hours, so let's see what happens
We're
over the
gonna see
next.
more secondary sanctions
you're going
very
to see a lot
soon.
more.
So this is a taste of
You're
what's
going to
to
see a
come.
lot more. You're going to see so much secondary sanctions. Yes, ma'am.
Absolutely, Karan. So 8 hours have passed, is what Donald Trump says. We haven't yet, we've only seen an MEA statement thus far saying that we are being targeted. What exactly do you make of this 21-day window that we have? How should India be utilizing this?
I mean, jumping off from the conversation that you guys were already having about dairy, and just, to give you a statistic, milk in India is, I think, around 57 or 61 rupees a liter. In the US, it's about 90 rupees a liter in the US, which means if it comes to India, it's going to be much more expensive.
Yeah.
In India, we protect pencils as if American made pencils would be much more cheaper than Indian made pencils, which again is something that I don't buy, largely because, well, the per unit labor cost is much higher in the US. So if we are to really make the most of this 21-day window, we have to honestly think about cost structures that differ so much between these two economies and recognize that for most products, India would indeed be very cheap in terms of producing those goods, and consequently, we don't have anything to lose by getting into this kind of a trading arrangement. So I don't know why we are so apprehensive about offering concessions, because we have offered concessions first to Australia and then to UK. So why not with the US? So it seems to me that there's a lot of rethink that needs to happen within these 21 days, and we can talk a lot about what has happened in the past, but I think it's also important to take a look at where we want to be, right? We all talk about a Viksit Bharat in 2047. Can you point at one advanced country that actually does have so many protectionist policies, or at least has had so many protectionist policies over the last 3 decades or so? So, if you're really thinking about becoming a developed country, then maybe you should also start opening up your economy and adopting policies that are, being adopted around most of the advanced world and not being so cagey about it. And one final point, because this has been on my mind for a while. Our policymakers keep saying that private sector is not investing, and yet we are protecting our private sector companies by having these high tariffs, and despite these protections they're not investing. So from a policymaker standpoint, I think they also need to introspect that why are they even protecting if these guys are not going to invest despite the government doing everything possible to encourage investments. And to that, my answer really seems to be that because there's no threat of competition, there's perhaps no need on their part to invest. So we are stuck in a very bad equilibrium, and the only way to get out is to kind of, rethink our trade negotiations over the next 21 days.
These are valid points that Mr. Bhasin makes. We are now joined by Dr. Jayant Dasgupta, former Indian ambassador to the World Trade Organization. A very good morning to you, Dr. Dasgupta, and a very warm welcome, sir. This 21-day window, what do you expect India to do? Buckle down or kneel down? What are the options in front of North Bloc and the PMO?
I think the options are many. One is to, of course, allow everything at zero duty, as many people are advocating, in order to make our industry and our economy, different sectors, including agriculture, competitive. But then what will happen is that there will be total chaos. Between 7 to 8 crore families are dependent on dairying. And of these, many of them don't own any land. The issue is here about dairy products is not only about market access. It is about the US cattle, which are fed on animal remains, on animal blood extracts, and whether that can be termed as a vegetarian product. Now, it can cause a great deal of confusion in India if it is allowed to come in. To my knowledge, the other countries, like the European Union countries, which have access in dairy products, the UK, they don't follow the same practices. The US does it, and I don't think the New Zealanders also do it, but the New Zealanders are very big in dairy production as well. Now, the point is that once you allow the US to come in at zero duty or thereabouts, which President Trump wants, you can't stop Australia. Australia, incidentally, has not got any access in dairy products. And New Zealand, which is one of the largest producers of dairy, in terms of its surplus. And the EU will, of course, also ask for its pound of flesh in the FTA negotiation. So that is one thing. It is about the livelihood issue, basically. The second point is, you can compete on cost terms, but you can't compete with the US Treasury, which is doling out huge subsidies in terms of billions of dollars. Yes. Just to give one small example, in the case of soya, China stopped importing soya in the first term of President Trump. The soya farmers were so much in distress that the US Treasury very casually doled out $28 billion worth of subsidies to just soya farmers. Now, that is the kind of latitude and, deep pockets that the US has. So we have to take a calculated view. As far as the main question that you raised is concerned, I think India has given a lot of concessions, all on offer, and there are only a few red lines which it has mentioned: GM, corn, soya, dairy products. Now, the other point which needs to be borne in mind is that it is not about access in dairy or corn and soya. It is about Russian oil.
Yes.
And tomorrow, it could be something else. President Trump in the last 7 days has reiterated that if a country is a member of BRICS, which is basically an anti-US coalition out to do de-dollarization, then they would be subject to additional tariffs. What is preventing you? Stop buying Russian oil. The oil prices in the world go up. Your economy takes a knock. And then, because you are a BRICS member, additional tariffs are slapped on you after 21 days.
Absolutely. Dr. Das Gupta, you have hit the nail on the head. In the last 24 hours, what has occurred, what Donald Trump was intending to do and he has done, seems to be more about the Russian oil than about, trade as such. What exactly is he doing? Let me also bring in Karan here and try to understand from him, where does this leave India-US relations? And do you think this is more about since you are a friend of my enemy, I'm not going to be dealing with you in the righteous manner?
Well, I mean, the oil markets, as it were to have happened, oil prices have come down, and that is one of the reasons why even Indian oil companies, particularly state oil companies, have kind of gradually diversified their oil delivery. So, in some sense, if none of this would have happened, we probably wouldn't be buying so much of Russian oil over, say 1 year from now. So what has transpired, in my view, with regards to the overall US India relationship is concerned, it's a temporary hiccup. I think there are more reasons on both sides to kind of solidify this relationship. And yes, there are times when there would be disagreements. There were disagreements even initially when India had started to kind of, buy Russian oil. But as you saw over the course of the crisis, there was a fine appreciation of what India was doing to stabilize the oil markets. That was a very different time, though. At that time, oil prices were very high and were likely to remain high. And what India did was basically keep them low. What's happening now is a different problem. At present, you need oil prices to be a little bit higher so that shale oil can be drilled out and shale industry can be more competitive. And in that context, I would put the recent tariff in that context, because this is a ploy to kind of hopefully get India to buy some oil from the US. And in 2020, even in 2019, a lot of our oil was actually coming from the US. So maybe it may not be a bad idea to actually just go back in time and revisit whether that is a better way of dealing with this crisis. Buying more of US oil rather than Russian oil, and hopefully continue with negotiations so that we don't lose out in terms of access to the US market.
Right. Coming back to Dr. Jayant Dasgupta, sir, what do you think are the discussions that are going to happen between the Indian and the Chinese premiers, as also what is buzzing in Moscow?
I think there is already talk of course, Prime Minister Modi is going to Shanghai for the Shanghai Cooperation Organization meeting. But I don't know whether it is Shanghai or Beijing that he's going to. But anyway, there is already talk of coordinating the actions of the BRICS countries. President Lula has mentioned that he would get in touch with President Xi Jinping and the others. And Russia, the deputy foreign minister, has also floated this idea that there could be a trilateral meeting between Russia, China, and India. So all these things are in the offing as events are unfolding at a fast clip. There could be a virtual meeting between the three heads of state, President Xi Jinping, Prime Minister Modi, and President Putin. Before that, of course, the preliminary discussions at the minister level will have to be carried out as to what can be done to counter this kind of a thing, because the Russians have already come out with a statement saying that the US threat against India is completely unjustified. And from the figures that have come out in the papers, India is the largest buyer of oil from Russia, larger than China. It is about 1.8 million barrels a day, whereas the Chinese buy about 1.1 million barrels a day. Of course, they also have plans to build a pipeline from Russia to China for gas, and they could be having pipelines for oil as well. So things are not very clear, but the basic issue is India. Suppose the Russians were unable to sell oil and the oil prices go up. At the moment, they are not up. But our minister, Hardeep Singh Puri, has mentioned that if we were to completely stop, and hypothetically, if China were to completely stop buying Russian oil, it could reach as high a figure as $120 a barrel. The last point I wanted to mention is that when it suited the US, soon after the Ukraine war broke out, Janet Yellen and even the US ambassador to India, Eric Garcetti, they were encouraging India by their words and statements to buy oil from Russia so as to stabilize global prices and not let the world suffer an oil shock. Now, of course, that one can say from the point of view of President Trump's administration that was all President Biden's doing, and it was, he had nothing to do with it, and he doesn't subscribe to that view. But the Americans are still buying things from the Russians, which are helping their war effort. So are the Europeans doing. The Europeans, in fact, have, increased their purchase of gas from Russia to about 20% of their requirements. So what are we talking about? We are talking about hypocrisy of the worst kind. And,
Absolutely.
Our war is your war. But when it comes to Pakistan, they have not given out any statement saying that, as has come out from the White House about, India.
Hold that thought, Dr. Dasgupta. The very valid points being made there. Let me also welcome our other guest who's joining in, Mr. Mayuresh Joshi, Head of Equity Research, William O'Neill. India is also joining in with the pre-open now taking shape. Remember, the first pre-open tick was down by over 400 points. It's swiftly improving. We're at 24,429, 142 points of a decline. Mayuresh, good morning to you. How do you think the Indian markets will take in this additional 25% of a penalty that's been slapped on India over and above the 25% tariff that we were discussing last time around? What's your thought?
Morning, Sakshi. No, I think the markets were bracing for this. And obviously, I think Trump has announced that yesterday night. So there will be a knee-jerk reaction onto the markets. But I think the markets will take it maturely because I think what you've probably seen from a Trump rhetoric perspective, I think he's targeting the BRIC nations. So I think the Brazil president has already put his statement out. He's targeted India, China, we are still not sure. And Russia obviously remains a thorn in his flesh. So somewhere I think the BRIC nations are somewhere where the Trump targeting is happening. And all this is happening in terms of negotiating hard, of getting India to the table and negotiating hard in terms of coming into the demands. The government has not relented to that so far. So knee-jerk reaction is expected. The bigger question here is what happens with FPI, FDI flows. But those are largely getting negated with a strong domestic flows and the kind of SIPs that are still continuing. So knee-jerk reaction expected, but in my sense, I think the mature markets are mature at this juncture, and therefore I think it would not be a structural decline for the Indian markets, with the hope that there will be some element of resolution happening over the next few weeks.
Right. At this point of time, it's a flat open as far as the Nifty is concerned. 25,515. Remember, today is also the weekly expiry of FNO contracts, so a bit of short covering is expected. We'll see how the Nifty closes because that will be a little more important than what the opening quotes are, where people will be booking profit. In the last 5 trading sessions over previous Thursday, the Nifty has slipped more than 200 points. So that's those shorts that are likely to be covered, and then maybe you will see some selling pressure. Good morning to you, Mayuresh, and a very quick one as far as your research team is concerned. Any views that they have come up with on stocks that might be worst hit? Maybe garment exporters, maybe shrimp makers, maybe to some extent even companies that deal with the US on light machine engineering, maybe Bharat Forge. which are the companies that you think will be worst impacted?
Morning, Shail, sir. So yeah, you're absolutely right. I think textile as a space is something that will get impacted the most. And obviously, I think, in my opinion, again, I think any company which is having facilities outside India, whether it's in Vietnam or Bangladesh, they might just shift a part of the business for US exports from there till there is a resolution on this count. Marine feed, which is your shrimp exporters, obviously also take a hit. Some chemical companies are going to take a hit as well. And yes, I think some companies which are also probably into the engineering space. So I think these spaces is somewhere I think where the hits will probably happen to a certain extent because it's impossible to compensate at least that short-term volume loss if this continues for at least some periodicity of time from other markets as well. So that sentimental hit is going to happen on textile players, shrimp makers, a few of the engineering companies, companies like Bharat Forge, which have a decent presence, some chemical companies which have a decent exposure to the US market. And therefore, I think these companies might feel the heat, at least till the resolution is achieved on this.
What would your stance be on IT companies, pharma companies that have large part of their revenues coming in from the US, again, 60, 70, 80% odd for many mid-cap pharma and IT companies as well. What's your thought process there?
So IT is going, Sakshi, through its own sweet problems, right? I
Yes.
think there are multiple issues as far as their earnings trajectory is concerned. And with tariff impositions, how does it impact discretionary spends going forward for various industries? I think that is a trend that everyone would like to probably see. And therefore, I think IT might still be an underperformer as far as the markets are concerned. As far as pharma is concerned, he's still kept exempt, and his statements are still that there might be some amount of a minimal impact as far as tariffs are concerned, and he'll increase it slowly and steadily going forward. But again, I think the risk in terms of the rhetoric that Trump is playing out with, the pricing related issues for generics in the US market, and even with those minimal tariffs, how does that impact pricing, even for the branded generics, which are already priced higher than your normal generics, is something to be seen. So again, I think it is a rhetoric that is getting played out. These sectors, though largely immune from what is happening, are still having their own internal problems. And therefore, as I've always maintained, I think within healthcare, I think hospitals as a space is something that is domestically driven within the healthcare domain and largely immune to what Trump does.
Okay, ladies and gentlemen, the pre-open has settled 110 points down on the Nifty. 24,500 is now with the bears. We are at 24,464. Another 200 point downtick on the Nifty Bank, and of course a 140 point downtick on the IT index, which in any case has been in intense pain. At this point of time, Mayuresh, do you want to sort of go over the 21-day period which ends on August 28th and then maybe take a call to buy or maybe sell further? What are you going to do for the next 3 weeks as far as advice to HNIs, retail investors is concerned?
So again, I think the logic that we have been deploying, Shail sir, has been pretty simple. Focus on domestic sectors. And if the market does correct for some reason or the other, including what we're probably seeing, where there is also some element of earnings disappointment in a few sectors, I think a few domestic oriented sectors will continue doing well. I think consumption is expected to pick up quite nicely as far as the Indian context is concerned. The expectations in terms of more operating leverage being played in earnings of a lot of consumption-driven companies is something that will drive return ratios and balance sheet strength as well. And therefore, domestic focused sectors might continue doing well. So I just mentioned hospitals as a space. We like agrochemicals as a space. We are liking alcohol beverage as a space within consumption. Selective FMCG stocks might make a very strong comeback. Select auto stocks, which are domestically focused, might make a strong comeback as well as consumption trends evolve. And so will domestic apparel makers. I mean, I'm not talking about the export-oriented textile players, but domestic apparel makers might actually continue doing well, in my opinion. So I think focus on domestic theme. If the market does correct, I think it might give you opportunities to probably look at good stocks, leadership stocks within these sectors.
Meanwhile, let me just read out a few brokerage houses updates as far as the tariffs are concerned. Nomura has come out with a report on US tariffs on India. It says that short-term growth risks are intensifying. It also believes US accounts for 18% of the total exports and 2.2% of the GDP in FY25. If effective, the steep 50% tariff would be similar to a trade embargo, will lead to a sudden stop in affected export products. They also say lower value addition and thinner margins across a number of industries could jeopardize operations as well. Now, apart from this, we also have Bank of America on US tariffs on India. That's said they are exploring the potential fallout of India seizing Russian oil imports. Russia constituted 10.4% of the global crude oil supply in calendar year 2024, with India purchasing 13 to 18% of the total Russian supply. Overall, a reduction or a discontinuation in crude procurement from Russia could be negative for the oil marketing companies and positive for the upstream E&P players as well, given the smaller discounts in recent months, and the macro impact is likely to be contained. Those are the two important brokerage houses' views that have come in as well. Let me just ask Mayuresh to weigh in on the oil and gas sector and there look at what are the opportunities there. How should investors be, in case you are heavily invested in the oil and gas space, what should you be expecting going forward?
So I think you had put a very good slide before I came onto the show in terms of how India imports oil. And therefore, I think the basket that India has, how does India now leverage with Trump tariffs coming through its oil imports is going to be extremely critical. Having said that, and I completely agree with the previous speaker, that if Russian oil is completely taken out of the market, I think oil prices will actually spike up quite significantly. So I think there are a lot of ifs and buts, Sakshi, for the entire sector. If this happens, what? If that happens, what? And therefore, I think that uncertainty is something that will play on both upstream and downstream companies as well. If crude oil prices start moving higher, for any reason whatsoever, if Russian sanctions are wrongly deployed across, you might see upstream companies actually have some element of an advantage. And that does not benefit the downstream companies because there will be an element of an inventory loss that will come through. Then marketing margins will also take a hit because there is every possibility that if crude crosses 85, the taxation part comes back in the Indian context. And therefore, I think there is a lot of ifs and buts as far as the oil sector is, or the oil as a sector is concerned. And therefore, we are largely carrying a neutral view because we are really not sure on what will evolve, how global trends will play out. And therefore, it's a wait and watch mode, whether it's upstream or downstream companies.
Okay, ladies and gentlemen, the markets will open shortly, and we spent a lot of time discussing the possibilities. A lot of ink has been wasted on what it is going to be all about. But remember, it's all about power, it's all about positioning, it is all about your currency, and it is all about a market access in somebody else's market. The final answer will always come from what the market thinks is right and what is going to happen. The opening quotes are upon us. Nifty 86 points lower, Bank Nifty 120 points lower, the IT index about 100 points lower. The first thing I want to see is textile stocks. They will give you an idea what the market is thinking. 5% lower circuit on Kitex garments. Gokaldas exports a percentage point lower. KPR Mills 4 percentage points lower. VTL, which is Vardhaman Textiles, 2% lower. So that's the thumbs that is coming, a sense that is coming in from the textile companies. Remember, these are opening quotes. Remember, it's the FNO expiry. So markets will be volatile today. Let's get into the top index heavyweights. Are there any gainers? Yes. Defensive. ITC is up a rupee 10. Nothing to be happy about. ICICI Bank is up 1 rupee 70. HDFC Bank is up 1 rupee. Hindustan Unilever is down 7 rupees. What is hurting? Kotak Bank 28 rupees lower. Tata Motors 5 rupees 30 lower. Bajaj Finance 6 rupees 30 lower. So far, what is the top loser as far as the Nifty is concerned? Well, let's take a look into what the NSE 500 is indicating to us in terms of most actives. Okay, Kotak has a block deal, so we don't have to worry on that. Already 2,000 crores worth of transactions have happened. Counters at 1973. Selling pressure on Zomato, selling pressure on Trent. What's up? Godfrey Phillips, 3.8% higher, 11,273. There doesn't seem to be a discerning trend as far as the first opening quotes are concerned. Let's look at the advanced decline ratio. Okay, this is a point of weakness in the market as of now. You have 520 shares in the green, 1681 in the red. So it's an easy 1:3. For every one share in the green, you have 3 in the red. All indices out of 19 are in the red. Nothing much to talk about. Major losses from the Nifty Energy Index. Therefore, IOC, BPCL and HPCL are the stocks that are in pain. So all in all, Sakshi, it's a fairly mature reaction to this ongoing tariff war, and that could be because of short covering, or that could be just because of maturity. What are you watching?
Absolutely. I think that's the right word. Mature reaction to the penalties that have been put. By now, markets have understood that these statements could keep on changing, and the 21-day window that we have till August 27, there could be some change to what is being seen at this point in time. Mayuresh, to you, beyond these 21 days as well, Trump is here for 4 years. Do you think, such things, if not tariff, even beyond the tariffs, that could continue to keep the markets on the edge for a far longer time than we are looking at right now?
Yeah, so we are actually bracing for 3 years, 3 months, Sakshi. So that's a positive to be taken away. But largely, again, I think beyond these 21 days, it's very uncertain because he's very unpredictable as an individual, and therefore I think what comes on, what goes on in his head is anybody's guess. We have to safeguard ourselves. There is no two ways about it, and therefore I think safeguarding ourselves in terms of maybe other Southeast Asian nations, the African nations as well, in terms of our export markets, is something that we'll have to seriously look at. But again, I think earnestly, I think. All the measures that Trump is probably doing is probably hard to get India onto the table and negotiate very hard. And we've seen that in the past, that he changes his stance every often as well. And therefore, I think India's reaction or the government's reaction has been very mature. The market's reaction has also been very mature because the markets are sensing whatever has happened historically. I think if that probably repeats, there will be every sense or chance of some element of resolution coming through and some element of sanity prevailing as far as these tariffs are concerned.
Okay, ladies and gentlemen, the markets are now sort of perking up, and it's the localized stocks that are doing well. Look at how defense is reacting. Remember, all these stocks were sold off very sharply. You've seen 5,500 on HAL, Hindustan Aeronautics, now in green tick after a major revision. 45 for you. Bharat Dynamics, we've seen 2,700, now at 1,582, a green tick. Mazgaon Dock, we've seen 3,300, now at 2,781, 0.5% higher. So this is how the markets are reacting, focusing on the domestic market and domestic stocks. A green tick on Pidilite, 1:1 bonus. Good strong earnings, now 3,076. A green tick on stocks such as Colgate Palmolive. As Mayuresh was mentioning, FMCG will come to the fore. Let's look at the FMCG sector in terms of stocks that are doing pretty well within the index, and that is Britannia. Earnings that were disappointing yesterday are looking better now after the price correction. 2% higher, 55.04. Dabur 0.5% higher. Nestle 0.5% higher. Remember, these stocks were also beaten black and blue earlier. So value buying is back on the market. A very quick look at volume buzzers and a very quick look at new highs, and then we'll get Mayuresh back into the picture. New highs are Fortis Healthcare, pure domestic play, 3% higher. Look at Indraprasth Medical. These are companies which have absolutely no relation to what is happening between India and the US, and therefore you have a strong move coming into hospital stocks. as also look at volume buzzers, and then take Mayuresh's top pick in the hospital segment. Okay, you have Kotak, which we've already decided upon. ITI is showing strong volumes. HUDCO is showing strong volumes with a green tick, as also Fortis and Bajaj holding. Okay, Mayuresh, a quick thought on hospital stocks and your favorite there.
We love the space, as I said, within healthcare. And therefore, I think Fortis has remained our top pick within this space. Brilliant set of numbers. And therefore, I think if one really presumes the RPOPs to probably inch higher, the maturity that has been achieved in a lot of new hospitals that have probably opened up, the greenfield and the brownfield expansion happening in an asset-light mode, which will not create huge amount of leverage onto the balance sheet. And therefore, core dynamics improving, reflecting in better return ratios is something that will play out. So I think Fortis and Medanta, which is global health, which is also on an expansion mode. They're expanding around 1,000 odd beds. Margins are for Medanta, margins are expected to be between 25 and 26 odd percent. Return ratio is expected to remain strong. So these two stocks within the hospital space remain top of our radar. We also hold KIMS, which is Krishna Institute, in our local and global portfolios. But that holding has been at way lower levels.
Okay, Mayuresh, thank you so much for being with us on the program and helping us with all your insights there. Hope you have a great time and speediest recovery and get back in the pinkest of your health. And we'll see you soon on another edition.
Thank you very much, Sakshi. Thank you so much.
All right. We'll now welcome another top guest on our program, viewers. Mr. Maheshwari ji is joining in, market expert, and he's going to be sharing with us his wealth of experience now, with the kind of decades of trade talks, diplomatic ties, geopolitical, geoeconomic talks that he has actually seen. And he's going to share with us, how much of an importance is he going to give to what has transpired over the last 24 hours. Nishal ji, good morning.
Morning to you and your viewers. I think the one good, I will start with the gold lining of the whole thing. What is positive out of the whole thing? Okay. I think one thing is pretty sure basically that the uncertainty about what's going to happen is gone. It's been, so I'm saying basically the bottoms always, if you go back into history, bottoms always get made in the market basically once the uncertainty is gone. If you remember 2008 also, once Fannie Mae, Freddie Mae, basically they decided and said, okay, this is the kind of money which is required. And Fed came saying this is the whole. I think the bottom of 2008 was made. So I mean, these are the kind of things basically. So today is a defining moment. 50% is the one basically. You now can go back and work your numbers and all that and figure out saying what is the number. And I'm saying market is just going to go ahead from there. Saying, okay, this is a loss of maybe 30, 40, 50 billion dollars of exports or whatever number most of the people are putting out. But the number is much lesser. I'm just saying one number, but numbers are much lesser. And I think the market will just go ahead from there. So I think one uncertainty is gone. But yes, I think the biggest issue which I see is the India-US relationship, which was a very, very strong footing for last 20, 25 years. I think that has got, I think some chinks are there, and that is what my worry remains to be rather than anything else.
Right. Namaste Nishal ji, a very warm welcome as always. It's so good to hear your calm and composed voice in this kind of volatile times. This 21-day period that is given by the US for the 50% tariff to kick in, is this a negotiating tactic according to you, or is this something that India will use to maybe placate the US on one or two sectors and then continue buying Russian oil? What do you think is the end game?
To be frank, very difficult to say. These are all politically sensitive things, what's going to happen. But I think till now, if I read what has happened, I think India is quite clear saying that there are certain sectors where you cannot push us. And that's the stand which they have taken. And I think oil is just a byproduct issue. I think the major issue remains to be about the sensitive sectors for India, and there India is not willing to budge. And I don't think so there will be any movement there. Now, yes, 21 days is a good period because I think the team, US team is also coming, I think somewhere on 25th, 26th, something like that of August. And there is a chance that this 25% tariff goes away. But you can now work with saying that 25 tariff, 25% earlier one is now a given. So at 25% over and above that, yes, the 25 may come down to 5, 10, but I think two boundaries are set, 25 minimum and 50 maximum. That is the way basically when one should play this whole event.
Okay, Nishalji, I also wanted to ask you, for the average investor out there, what is the kind of strategy that you would advise? How to trump or tariff-proof their portfolios at this stage?
So I think very clearly one should focus on to domestic plays. So whether this is 25% or 15% or 50% at the end of the year, nobody knows. But the issue remains to be that the world is in a turmoil. The earlier setup that globalization was the way to go forward, that is now been, I think, country after country, basically, they are, the issues are there. And I think this is all going to show up in the global growth. So there is going to be a problem of global growth in the second half, definitely, because this kind of uncertainty cannot work in the world business. So focus on to domestic plays. That is the only way, basically, and be safe in this market.
Absolutely. I think that's very, very well explained. What has gone out of the window is sanity as far as the global order is concerned, and now it is every country for itself. How can you protect your local economy at the same time being on the right side of the global policeman? And of course, if you have to invest locally, and that's the reason why you see many local focused companies such as hospitals doing very well. Nishchalji, if one were to allocate fresh funds at this point of time, one, would you be confident that markets now will be lower than what markets will be 6 months later, which means that we will rise from here? And two, what is now your domestic allocation versus maybe exporters, maybe the broader portfolio as well?
So I think it should be a 80-20 kind of a thing. 80% should be domestic and 20% should be this thing. And 20% also you should be into sectors where US cannot do without. So I'm saying IT and pharma are two sectors. Basically, I don't think so US is going to touch them because there India has got a very, very strong leverage. I just number which I would give you, basically 50% by volume is the kind of drugs which India supplies to US in generics market in the US. So 50% of the US drugs are Indian drugs actually. So I think US is not going to touch there. And similarly IT also, because that's another very, very strong forte India has. So I think this 20% allocation should be given to that part and the remaining 80% should be Indian allocation. What was your second question, Salish?
Yeah, I think you've answered both of them in terms of allocation and of course where markets are likely to be held. Mr. Kejriwal joins us. Today we are extremely lucky. We must thank Mr. Trump for this opportunity to welcome Mr. Arun Kejriwal and Mr. Nishchal Maheshwari in the same time zone. Namaste Arunji. The worst that was likely to happen has happened. There is a rising view in the market that this is what was likely to happen. It is good to have a horrible end rather than horrors without end. Now, which side of the equation are you in? Do you think the worst is over?
Well, I believe what could happen has happened. However, it's not the end of the picture. It will be a little longer. It will take some more time to settle down. And what Donald Trump has done, he has brought people who were not the best of friends together. I believe his one biggest fear should now be BRICS becoming stronger and stronger, and it could become his worst nightmare from here onwards. Just imagine, you have China, you have Russia, you have India, you have Brazil, you have South Africa, who are the founding members, and you have another 10 countries, which are those which could be part of the new generation in the world who have joined this organization as late as 24. With these countries coming up together, and mind you, each of these countries brings something to the table. UAE brings the fact that it is a country which has some oil, but also has that tremendous hunger for capital to be employed. It offers all kinds of opportunities. So I believe a hornet's nest has been stirred up by Trump, and it has all been done जैसे वो हिंदी में कहते हैं ना बुड्ढा सटिया गया.
Okay, Mr. Kejriwal, good morning to you. So, you do believe this is an opportunity to re-engage with the BRICS nations, China, Brazil, Russia, all of us cobbling up and probably standing with each other against such oppressive or pressurizing tactics that the developed countries are using at this point in time. But at the same time, I want to ask you, will this irk Donald Trump even more? And how much can we actually probably just stay away from the US when it comes to export? Can we afford to do that?
You have asked a very, very interesting question, Sakshi, if I may say so. There are no straight answers to a question as loaded as what you have asked. You have to give it time to play out. This man is on a self-destruction mode. That there is no doubt. Now, every single act of defiance against him will force him to do something more. But how much more? Up to where can he go? Can he actually jeopardize the life of a common American citizen by imposing tariffs which have to be borne by America and American citizens? Because mind you, these are tariffs on imports that America is doing. It is not something that is on an export that America is doing. Secondly, we need to understand, while he had made an off-the-cuff remark that the pharma sector, there would be imposition of 250% tariff, but in the US, the entire medical bill, virtually for all citizens, is borne by the state. So it is the state who would have to pay this kind of tariff on the imports of generic drugs that are done into the country. Now, putting all of this in perspective, if each act leads to a higher tariff, I'm reminded of that. I don't know whether, Sakshi, you remember we had this concept of Anadi court, where for a petty offense, you had to go and present yourself in the court for, say, violating a traffic signal. So the judge there would ask you, did you break it? If you said no, the fine would double. If you accepted it, you would pay that fine and go off. So this is like that kangaroo court, or whatever you want to term it. This man is going from bad to worse to worser. So we all have to live with it. Our markets have to live with it. We have to get used to the fact that there is short-term pain, and there would be a much larger gain, maybe a couple of months down the line.
Right. Being an independent observer of the market, one can really speak your mind, and that is what Arunji is doing at this point of time. But another good news coming in from the market this time. The Nifty IT index, ladies and gentlemen, is in the green. 54 points higher now, 34,481. A tremendous sell-off in July, down 11%. The index itself, and from then on another 3-4 percentage points down. Now it seems some sense is coming back into it, as also the Nifty intraday low 460, at the moment 517. That's the state of play so far. Getting in Nishchal ji into the conversation. Nishchal ji, any view on FMCG from now on? Any view on defense counters? These were badly shaken, and both of them address the domestic part of the Indian economy, something which you feel will do well over the next 6 months.
Yes, I think so. FMCG, given that the kind of growth they show and the valuation, FMCG, and I've been historically maintaining the same thing on your channel, is largely a trading play. Because with a 10%, 15%, 10, 12% kind of a growth and 50 plus kind of P, you cannot be having this stock permanently in your portfolio. But I wouldn't say the same thing about defense, because defense is obviously the valuations are much higher, but the growth is also there, and there is a huge runway ahead of them. So one should be looking to acquire defense names basically on corrections. But FMCG, yes, at the moment one should be invested in, given that whatever is happening across the world, you should be focused internally. And we have got a good monsoon. There has been a tax rate cut, and all that kind of stuff is going to start showing up in the second half. So definitely FMCG should be there as a part of portfolio, but defense you should be buying only on corrections.
Okay. Arunji, could you also detail your list of key sectors that you would now be betting big on, given the fact that, the country is going to be looking at how we boost our own consumption, how we strengthen our internal economy? What exactly should be the strategy for retail investors forming their portfolios right now?
Sakshi, I would like to wait for 1 week.
Okay.
I believe 15th of August,
Yes.
the Prime Minister's speech at Red Fort is going to be very, very important. He's certainly going to detail a lot of things that India would now do in wake of what Donald Trump has done. I'm very sure the boxing gloves are on, and India is not going to take things lying down. The fact that after 7 years we are actually going to see the PM going to China. There will be representation from Russia. There will be high-level meetings taking place there. And you can be sure these meetings are not going to be soft ones. They're going to be hard ones to present a united front, to look after, I believe, more than 50% of the world's population. So these are very, very important meetings. So rather than firing all cylinders today, wait for a week. It's not too far off. Today is already the 7th, and 15th, we would get much more clarity. What do I expect to come out? I believe a lot of introspection would lead to development on things like PLI happening, where making in India, producing in India will see the state extending facilities to manufacturers, and that would be bringing about India's core strength.
Okay. The markets, ladies and gentlemen, have a different view altogether. Remember, I had pointed out 500 stocks in the green. Well, now that number has doubled. 1,000 stocks are in the green as far as advanced decline ratio is concerned, and about 1,300 shares are in the red, which were earlier 1,600. Now many indices are in the green. Look at how sharply the IT index is up. About 2 minutes ago, I had marked 40 points higher. Now it's 138 points higher. PSU banks are in the green. And what's really interesting is when you look at the Nifty 500, the index is now barely in the red, just 0.1% lower. And most probably, you will see a green tick on this one as well. So value buying coming in, whether it's because of the FNO expiry, only time will tell. But sensibly, money is getting deployed. You have a shade of green across the NSE 500, where the advanced decline is now 200 is to 300. So those are good things that are happening. Let's look at Any fresh new highs in the market that might have come in? No. JK Cement is the one that's joined Godfrey Phillips and Fortis. 7,062 for you as far as the cement space is concerned. Nishilji, coming to you. Another domestic play is cement, something which has really disappointed long-term shareholders. There's nothing that's happened because of this consolidating war that is ongoing in this sector. Good monsoons, of course, real estate in top form, lower borrowing costs. Is cement on your horizon as well?
Definitely. I think I've said earlier also in your channel, basically, this is one of the sectors which I'm very positive about. And obviously, good monsoon means basically the housing demand is going to be stronger in the rural areas. And the government expenditure, basically, I think that started picking up last quarter, and the numbers which we keep on tracking on a monthly basis. Definitely, I think it's going to be very good. Now, this current quarter, obviously, because of rainy season, you are not going to see the same kind of demand. But I believe coming 2 quarters, you are going to see both price increases as well as volume increases. This current quarter numbers, whichever companies call I've listened to, they are all talking of a price increase, and that is sustaining. So I think that is a good part of it. So very positive on the cement sector.
Okay. Arunji, I also wanted to take a broader view on the FII positions. FIIs have been on a selling spree on the Indian markets. What do these fresh tariffs do to their key positions in India?
Sakshi, very clearly, they would be tempted to sell some more because let's understand the first thing that happens is there would be an impact on the Indian rupee as well. Uh, Logically speaking, you would expect the rupee to sort of depreciate to some extent, and even the forex market would be looking keenly at what RBI does and what the government plans as a broader front against this tariff. If you were to ask me immediate impact of the duty being doubled as penalty, India is now going to import more crude from Russia, and probably whatever little we imported recently from America could take a back seat. It's now going to be a show of defiance, and it's going to be a little bit of tough talking, posturing, than necessarily good economics. And nobody is going to give in. Let's also understand that India currently, overall, if you look at its economy, it's not dependent on imports for quite a large number of products. Yes, oil, whether edible or crude, are both very important on our budget. But with managing these 2 items, we are fairly self-sufficient in, I would presume, 85-90% of our requirements. Electronics, chips, these are some of the other areas where we are lacking. But it is not that without US you can't manage those other things. There are enough and more options available. So I believe the next 7 to 10 days will be very strong posturing, and that planned visit from US of the trade team, I'm not sure what's going to happen to that, whether it will take place or will be called off.
Okay. Nishchalji, before we let you go, sir, this criticality of rare earth metals is now upon us. Two-wheelers, automobiles are all crying hoarse that domestic production needs to be beefed up. In your understanding, what are the 2 or 3 companies which are rare earth plays as well at this point of time in the listed universe, sir?
To be frank, I have not done much work on this, so I will not be able to answer this actually.
Okay, not an issue as well. As always, Nishchalji, thank you so much for this wonderful, well thought of process that could pan out over the next 1 month, 3 months, and 6 months. Thank you so much for your time, sir.
Thank you. Thanks a lot.
All right. Arunji
this
is
is,
with us. Yeah.
Yeah, continue, Sakshi.
All right, Arunji is with us. Arunji, I also wanted to ask you when it comes to the earnings that have panned out, what has been your key takeaway there? Has there been any outperformance that you would now start betting big on?
So, Sakshi, if you were to sum up, we still have one more week of results, and that could mean a fair number of companies coming in. It's by and large a so-so average set of numbers. What was missing was the growth that we were all looking for. Somewhere or the other, the consumption story has not picked up, panned out as one would have expected, which has led to some sort of a slowdown in earnings, performance, etc. The positive factor is the rate cuts that have happened to the economy have held the companies on a financial front. They seem to have weathered costs on all fronts, and with interest costs being lower because of the rate cuts, they are better off financially. Had that been coupled with growth across sectors, you would have seen some stellar results. So there is a lot of hope now for Q2. If that materializes, we could see India Inc. on a strong wicket. But to sum up, Q1 disappointing, doesn't give you too many leads to look into stocks and sectors based on Q1 numbers where you could get bullish for the immediate future.
Right. We'll also get Kunal Shah, Head of Commodity Research at Nirmal Bang Securities, to join us. Namaste, Kunal ji. A very warm welcome. You've been a global watcher of the entire world as far as the world of commodities is concerned. Tell us where crude oil is headed. 5 down days, a green tick today. Is the best ahead of us as far as crude oil prices are concerned?
Yeah, there was a fear that India will succumb to the pressure being imposed by US and they will stop buying Russian oil, but that didn't happen. In fact, the volume are likely to increase going forward with the kind of development which are taking place going forward. So I don't see any major shift in the global demand and supply landscape of the oil, and it doesn't seem that no matter what happens going forward, India is not going to back down, and that's one of the major reasons why oil prices have dropped. So we expect oil prices to remain under pressure. The upside tends to be limited for the time being until any major development take place, and I will not be surprised to see Brent at 65 and WTI at $60.
Okay. Very good morning to you, Kunal. Good to have you with us. Tell us about the dollar and rupee on the currency moves. What are you expecting now?
See, it's a very tricky scenario because nobody was expecting this kind of move, after 25, another 25 more, and they are talking about a secondary tariff and secondary sanctions and what. No, I mean, these are totally, this is not something you can predict, okay? What he's going to do going forward, what Mr. Trump is going to do. Absolutely. We should focus on our own economy and what is going to happen to the US dollar index. I believe going forward, Mr. Trump has made a statement that he's likely to replace Fed chair going forward during next month. And the moment that take place, there will be expectation of a straight 100 basis point interest rate cut in the US. So I think the depreciation in the rupee from here is going to be very limited. I'm expecting maximum another 50, 60 paisa, not more than that. I'm expecting rupee in next 1.5, 2 month period time should gradually strengthen, recover from here. We are likely to see rate cut going forward in future. The inflationary projections yesterday given by RBI was from 3.7 to 3.1. So I think all of these points point out towards a scenario that the rates are going to go down globally in the US as well as in India, and that would lead to appreciation in Indian rupee. So 85, 50, 85, those kind of level you can work out from the 2 months, 3 months horizon, and the dollar index should come down to the levels of 95.
Wow. We have a rupee bull in our midst, ladies and gentlemen, and that's the reason to get always listen to Kunal, because he has some wonderful views backed by very thoughtful suggestions as far as the global markets are concerned. Arunji, do you think the US Fed chair will be replaced before Mr. Powell's time actually ends? I think there's more than a year to go.
So, very clearly, he is trying to do things where people who do not support his agenda are being fired, looked down upon, replaced, and so on and so forth. But let's understand, if he does this to Powell, it's not going to come without its set of boomerang all across the world. It's not going to be looked upon lightly, because Powell seems to have done a good job as far as the American economy is concerned. And if it is done because Trump believes otherwise, Trump may be a politician, but he's not necessarily a great economist. And having a grip on American economy may not be his forte. So I don't think it's going to be taken nicely and kindly by the world. And there could be a serious impact of that on American markets, particularly the Dow. And the Dow is not in the best of times, even though it's quite close to its all-time high. But the volatility being witnessed is also a cause for concern.
Okay. Arunji, we will thank you then on that note for being with us to share all those insights with all our viewers, and we'll catch up very soon once further developments take place on this tariff front as well. Thank you so much for being with us on the morning edition. Kunal, to you, we have seen in the tumultuous times, it's been gold and silver that has been able to provide that extra edge and alpha to investors' portfolios that had big portions allocated. How would you expect the gold and silver prices to move forward from here? What is the advice that you're giving to clients at this development stage of the tariff front and uncertain times? What should be the allocation to gold and silver?
I think looking at the first geopolitical landscape of the world, it is looking very scary, because remember what Russia did to Ukraine was there was a fear that there can be NATO allies putting up with the weapons in Ukraine, and suddenly Russia attacked Ukraine. Now US has kept 2 nuclear submarines in near Russian waters, so that itself is a major provocation. So I think these are very uncertain times. We don't know. We tend to have wishful thinking, but the actions of global leaders are not indicating that. Absolute uncertainty and chaos can be seen. If something goes wrong. Yesterday there was a conversation between the Russian diplomat and the US, and no positive outcome out of it, and no negative also, but status quo. So things are not looking good right now. The West is losing its power, and East is rising, and West is not liking it. That is the narrative. The way the East is growing, that is not something West is okay with. So they are trying everything what they can to hinder the growth of the Eastern economies. And these are the time. That's what these are the moments in the world where you say World War I happened, World War II happened, and the similar landscape is happening right now. So these are the times when gold and silver is must in your portfolio, even though it is not going to provide you great return. Even if it doesn't provide you, it will act as a store of wealth. The fundamentals of silver are much better than gold to invest in. So we believe that going forward, silver will give you a bigger alpha than gold, but gold will still continue to give you decent amount of return for next couple of years. So I think they are must in your portfolio. And if you want to diversify amidst so much uncertainty which is going on in the world, gold and silver is must in your portfolio.
Meanwhile, there is a Prime Minister Modi's message that has really come in. Prime Minister Modi is in New Delhi right now. He's attending an event, and the statements that he has said are very, very critical. This comes at a time right after Donald Trump has penalized India with another 25% tariff. Look at what Prime Minister Modi has said. He has said, we will not compromise on farmers' interest. He has said, we will take whatever it takes to protect the interests of the farmers. Those are important statements that are coming ahead. He also has said, we are ready to face whatever it takes to protect interest of farmers, but farmers' interest is paramount. That's the first statement coming in from Prime Minister Modi after the additional 25% tariffs have been levied on India by US President Donald Trump. So clear message coming in from Prime Minister Narendra Modi that whatever it will take, that we will face, but we will continue to protect the interest of domestic farmers at large, which actually indicates that we are not going to be bowing down to US's demand of opening up the agricultural sector completely as well. Those are important statements coming in, Shail.
Yes, so the stage is set, ladies and gentlemen, for positions to harden on both sides, which is that the US will impose 50% sanctions and 50% tariffs, and India will protect its domestic dairy as well as the farming industry. Let us see how these negotiations pan on. Remember, public posturing is different from talks that happen behind closed doors. Let us hope that sanity prevails on both sides of the equation and that common ground is achieved. And that's the way, ladies and gentlemen, how nations progress, how companies rise, and how markets go up. Kunal, before we let you go, my final question to you is, apart from gold and silver, are there any other commodity assets that you are long on in your portfolio?
So copper looked quite attractive. We discussed last time, and we continue to remain bullish on it. So whatever volatility, because of volatility, whatever we see, so copper looks quite attractive. To 870 are the levels to go long for the upside target of 930, 940.
Okay, ladies and gentlemen, we now draw to a close as far as this show is concerned. It's been a mature and a sensible reaction from the markets. The Nifty is down 92, the Nifty Bank is down 193, but there is a sea of green on many stocks that have now moved up. In particular, GMDC 417 early morning low today was somewhere like 391. So these are moves that are driven by instances that domestic businesses will do better than what overseas businesses or exports will do against the backdrop of this escalating tariff war. You have companies such as Indraprasth Medico 6% higher, Shakti Pumps 5.9% higher, you have Cafe Coffee Day 5.7% higher, you have Rain Industries 9.3% higher. This is a cement play as well as a coal play. So some sensibility is coming into the market. Equity strategists and deep-pocketed individuals are focusing on domestic plays rather than go in for the broader structure. And of course, today being the FNO expiry, we will see how the Nifty shapes up. There's a lot more that's coming on the other side of this break, ladies and gentlemen. Remain glued to Business Today Television. It's going to be a very interesting day. Positions are being hardened.
Absolutely. Shall we have the Prime Minister bite now for our viewers to also see what exactly has he said on farmers? Let's just play that out for our viewers to really see what has been the first reaction from Prime Minister Narendra Modi after the tariffs have been imposed on India.
सोयाबीन, सरसों, मूंगफली सभी का उत्पादन रिकॉर्ड स्तर पर बढ़ा है। साथियों, हमारे लिए अपने किसानों का हित सर्वोच्च प्राथमिकता है। भारत अपने किसानों के, पशुपालकों के और मछुआरे भाई बहनों के हितों के साथ कभी भी समझौता नहीं करेगा। और मैं जानता हूं व्यक्तिगत रूप से मुझे बहुत बड़ी कीमत चुकानी पड़ेगी, लेकिन मैं इसके लिए तैयार हूं। मेरे देश के किसानों के लिए, मेरे देश के मछुआरों के लिए, मेरे देश के पशुपालकों के लिए आज भारत तैयार है।
India is ready. Prime Minister Narendra Modi says he is ready to pay any price that it takes to protect the interests of domestic farmers, and he will not bow down to any situation that will impact our Indian farmers. Well, that's a very bold statement coming in from Prime Minister Narendra Modi as the first reaction to the kind of unfair, unjustified, unreasonable tariffs that have been imposed on India by United States President Donald Trump at this stage in time. So this, like Shail pointed out, the stage is set. It is going to be a hard talk, and India is not just going to be being submissive, or bow down to any kind of blackmailing that is being done at this stage in time by Donald Trump with his tariff talk. All right, viewers, we'll wrap it up on that note then. On markets today, our morning edition, we have had, a longer edition for your benefit to be able to understand how do top market experts really read into what has transpired over the last 24 hours. Markets 90 points down in trade, 24,483, not too worried at this point in time. There is no sign of any panic at this point in time, and that is very, very mature. Throughout the course of the day, there could be extreme amounts of volatility, remember, because this is the expiry session as well. So keep that in your mind, and we will be coming back to you with other editions to follow on the market coverage, on earnings coverage, and of course, daily calls that answers all your questions at 12 noon to follow as well. Stay tuned.
Not all numbers are born for the balance sheet. Some are born to bring a smile. Some usher the future. Some make you stand tall. Some numbers light a fire and fulfill wishes. Some spoil you silly. Some echo joyful shrieks. Some numbers have smiles written all over them. Some make the planet happy. Some make the planet healthy. Some numbers rise against all odds. Some are made for dreams. Not all numbers are born for the balance sheet. As we spread our wings globally, we at Mahindra believe that the numbers we are most proud of are the number of lives we have touched. Mahindra, together we rise.
India's economic architects, together on one powerful stage, from Nitin Gadkari to Arvind Panagaria and Montek Singh Ahluwalia, visionaries who are shaping India's future, all debating the Viksit Bharat roadmap, where legacy meets leadership. Here, the real policy playbook, finance, roads, reforms, disinvestment, nothing is off the table. Inside views, uncensored. Only at Adani Business Today, India at 100, 8th August 2025, Shangri-La Eros, New Delhi.
It was nightmare central for commuters across Karnataka on Tuesday. This after state-run transport corporations began an indefinite strike, severely affecting